Hello, welcome back to another stream of ESP to Trading. It is Wednesday, January 17. It is 1:55 p.m. Eastern Time in the US. Okay, I wasn't here in this market. This area here I have highlighted here are these volumes, the market profile from previous days. This is a big volume area down here. We can see 20s, 30s, almost about the same that we have today. This is my intraday reference. This volume has been clear, this one too. I mean, if the market market traded through this area, I mean, this market shouldn't have any problem trading through this one. No? It just needs some volume. Do we have volume? That's the question. Now, the market has traded through. This is history. I traded through. This is history as well. I just have the upper side between 92 and 90. 90, where are you? 92, that is going to be my next in the upper side, okay? Plus whatever we are having today. Before I left, in the morning before I leave, just before I left, I was checking this market, and the market was making an attempt to close the gap. I didn't like this low. At the moment, I didn't like this high. All right. It was just too close to this one. It was, I mean, a really nice trade would have been just trying, in a market trying to close the gap and just trying here. It didn't happen. All right. It didn't happen in the first period. The first clue what I try to do is to identify what kind of market we are having today. No, when we have these two periods together and making, giving us a sign, buy sign here, it requires two periods. So probably, the high was going to be something like that as well. I didn't have any sign on the upper side. I didn't have anything here. Right? Actually, what I think is the action to the upside has not been completed. There's good odds that the market is going. Just check how much volume this market has. But when the market came to this area, I mean, you got A, B, C, D here. Notice what happened with volume. Right? It started to decrease. Yeah? When the market was here, it just decreased it here. I took a small position. I took a put here, but my put was 47.50. It was 1.5 at the time. It went down all the way to 7. But this is the thing. I had to leave. I wasn't willing to raise. What I needed is the market to develop. That was a developed trade, to develop, to get some momentum. Right? It didn't have it. Unfortunately, by the time I had to leave, the market was down here. My position started to develop, but I had to close. I had to close for a break even. It's actually a small loss, like I guess it's commission that I have there. I had to deal with that. Right? I accept what the market can do. If the market moves in my direction, so what, right? I'm not there anymore. That's history for me. That's a fear, right? That's a fear of missing out, the fear to leave money on the table, but it is what it is. Now, 2 p.m. we have beige book. This is the most interesting area here. This area here, but what I see here now is this high is kind. When the reason another reason why I took a put here is, you know, when the markets make three, this there was three wide, no excess at low. I mean, this limit, this kind of market limits uh, the extension, limit the range extension. It don't necessarily is always that way, but it can tend to limit the extension of the damage they can do either in either direction. Okay, we have the same thing up here. We have the same thing down here. I don't see anything. Fed swap stream also March 11.54 interest rate cut about 50%. That was 12. Yeah. Now, pay attention to this. Okay, something. This is live. Okay, what happened here yesterday? What's happening here now? Okay. What is this 54? I don't know. Oh, okay. It was this has been corrected. That's why I had my put at this one, at this level. This level, that level is history. Now this little guy here, you know, traders have memory. Now traders are trying to do what you know. It worked yesterday. It worked Friday, right? I don't know if it's going to. I'm itching to go long here. What can I do here? I just don't like this thing. Yeah, that was it. But how? What about? What would that be? That would be 65. Okay. The market has closed the distributions. All right. There was a distribution here. No distributions anymore. So each time the market has less and less volume. It may end, if this continues, it may end down here. It's still higher than the previous 10 days. Check this. This is taper, right? This is you know, if you know, my strategy, this kind of taper is a sell. If I got something up here, maybe I would add something. But right now, POC is up here, Halbach is up here relative to where the market is. You know, this is to me is unfair prices. You know, prices are too low to be a seller here. For me, remember, that's just my opinion, my humble opinion here. You need to have your own and act accordingly to what you think is your strategy or your thing is going on. Another thing that what I had before I left, I was checking the Nasdaq as well. And the Nasdaq was bought from daily Halbach, it bought from this. This period also is exactly to the tick to Halbach. So there can be I don't believe. Again, you know, this level keeps appearing. The market just, you know, I don't know what's going on here, right? As I say, I don't even remember why or how I got to this number. But notice where the market stops here. Twice has been bought here at the same level here. You know, most of this weak inventory, this weak long has been removed. You know, there's no more long inventory in that market. Now, what trade? What do we have here is value is lower. Faith-based book, the prospective for interest, you know, interest good. Well, there are good odds. The base book, good odds. There are going to be right cuts. Yeah, there are good odds. There's right cuts in the horizon. Now, this level here, what the heck is this level 60? POC, what can happen to POC? Can POC move lower? J, KLM, that's 3 more periods, 3, this can be 6 wide. 1, 2, 3, 4, 1, 2, 3, 4, 5, 6. If the next period straight around this area, POC can move lower. Right now, I mean the lower prices. What I would look here is for a long position, but value is lower. I'm not going to go against the trend. I'm not going to go against the trend here. Notice where this selling is coming from. From this what was support now is resistance. Technical trading here. What was support? This was support. The first half of the day of the session now is resistance. Nasdaq was buying from daily holdback. Now is selling from daily holdback. I don't see. If I look for something, I will find something. Okay, I will find something. Okay, this is a long. This market is right on this low here. This is a long. Oh, I got this. This is a short. The market was sold from this. This is short. I will find something, and I will find reasons to be short and reasons to be long. When I do that, quite often, most of the time, the percentage of times I am wrong is really high. Okay, that's another part of my strategy is, the opportunity needs to present itself without me looking for it. I will just find something. I will have something, right? Something that I'm just looking at. Oh, boom, right? There's something. It is not the same all the time. We remember what happened yesterday. If you were here yesterday was a really bad day. It's really hard to trade yesterday because the market was hitting stops in every direction, right? The upside, the downside, stops being hit all the time. How do you trade that kind of market? This market is kind of different. It is grinding its way to the downside, grinding its way to the upside, right? You can see here the market was trying to close the gap. Market fails, cannot close the gap. That can be a trade. The stop is the gap close, or maybe what was my thinking when I took this put here? My single put here, really single put here, right? I'm not going to lie, just have one position here, and it was, I saw tempo decrease. Tempo was really bad. There was nothing going on here. Right? The market was trying to close the gap and just stopped here. The market stopped in his tracks here. Now the next period also stops right there. This is very uncomfortable, because the market can have spike here, some movement, can move really fast, long distance. That is what happened yesterday. All day long we had that yesterday. Why is not that going to happen today? It can happen anytime. That's the thing. It can happen anytime. So it was very uncomfortable. Very uncomfortable. A good trade is uncomfortable. If I am 100% sure that I have the right trade, I have to be, there's going to be right warnings like these alarms that are sounding, ping, 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 something can happen, right? If something's too good to be true, usually it's not true. That's what trading is about. You know, you have your strategy, use it. Also, something here that can limit the damage that this market can do to the downside is this actually the double high here. You know, this double high here. My time frame, my time frame is I use, as you can see, I use 30 minutes periods. I don't use 5, but if you check your 5, I guess you will find a range here. You will find a range. Let's see. 5 minutes. 5 minutes. Oh boy. Yeah, okay, let me show you what I got here. I got to open this detach. All right. Okay, this is the 30 minutes, huh? This double high here. Now, 5 minutes. All right. Look at this. 1, 2, 3. Here. And look at this, how this market keeps going here. You know how this range here, going lower, mechanical, really nice, right? Tap, tap. You can use a trend line here. Draw a trend line during this high and this high, for example. Now this high has taken that trend line out, right? Now that's a sign to go higher. That's a sign to go lower. Who knows what happened here? Higher volume to the downside. What happened here? Higher volume to the downside as well. When the market takes this low, that's this bar here. Take this low. Once it takes this low, it never looks back. Okay, what is the other one? This one. Low here. It takes this range out. And now the market is coming back. Checking this level. It did not take this high out. Okay. That is technical trading. If you check some traders out there, that's the way how they trade. Oh yeah. VIX is increasing. We have 15. This market, you know, when the market was going higher, before we have this big volume up here. But notice this, right? Notice how much volume you have here. How much volume you have here. Let me use the 2 ticks chart, right? How much volume you have up here? 22, something like that. How much volume you have down here? You have a, you know, kind of like almost 50% higher, right? 50% higher. When the market did this to the upside, we don't have an excess here. It has the same the volume profile look just like this, but in the upper side. Now I am wonder here, you know, notice where H is bought. Notice where J is being bought. Notice where I was bought, right? It came down into these fingerprints. There's absolutely nothing down here. And this is the go, no go area. Down here, this big area here. The fail, you know, when the market failed to make a new high, liquidation. they start to liquidate the loans. All this trade to make a new highs is being liquidated. It's going to come down all the way down to here and have downside extension towards this non-excess low. Who knows? I have no idea. Now, okay, this attempt to sell from the same level was, the same thing that happened here. They did that here, and they did the same thing here. This was an K, although this was an H, but the attempt was now in an I, right? Let me close these profiles. This is information that can be useful down the road. I don't need this one. I don't need to clinch to this thing. Remember also from the overnight where this all this selling is coming from. Where this selling is coming from. Yesterday we have a short covering rally at the closing. Traders might expect the same thing today. Now the 47.50 now is back to almost 3 points here. That trade has been completed. Right? When I had this put, remember what happened here, right? What I had to do. That trade has been completed. Now, what's next? What's next? I don't know what's next. That's the thing. I shouldn't keep looking to the downside. I shouldn't look to the upside. I shouldn't look for something. What I need to do is just monitor the market, keep monitoring the market. What the market is doing. If early in the session the market ends one time frame higher, which increases the odds of rotation. Market did not close the gap. There could be some downside extension. The market ends the action to the downside here. Ends, H ends. But it's just, this is bait, it's a fish bait or bait and fish or something like that. You just, this was a trap here. It was a trap. Now we are going to come down up to here, right? Remember, these pieces of information are not necessarily, going to be used right now. We don't know when. Now I know, for example, what I'm going to do. I'm going to name this poor high, gap low. This is the gap low, and it's also poor high, meaning the action has not been completed here to the upside. And also another thing that I can use, no taper, meaning that there is high volume here, high volume the upper side, higher volume the upper side. Something like this didn't happen, without volume just don't lie, and usually this is a sign the market can come back to repair this in the next couple sessions maybe. Don't know. Now let me check what temperature are we, because I got my faucets running.
When someone has
faucets running, what temperature are we? We are 40 degrees. Yeah, feels like 35. Okay, just a second, I need to close my faucets. All right. You know, the cost of paying some extra money for water is really low compared with the possibility to call a plumber to make repairs when the pipe bursts. Not just a plumber, there can be floor damage, water, walls. That's a mess, man. And my house has the mechanical room, has the electrical panels very close to the main water line. All right, let's see what time is it. 21. This market is trying to do something, trying to get back inside this. Inside this range here.
Order filled.
Oh, come on. Okay. This is when I should see some upside extension, if there is something. Okay, I have set my stop to break even here. Oh boy. No. It is, you know, this area is it's very hard to trade this area because value is here, POC here. We are not that extreme, so volume has just drag here. And my stop, if I want to be safe, I can put my stop here, right? But it's just too, how much, man? That's almost 10 points. I don't want to risk 10 points here. I just don't, because and the reason why I don't want to do that is because value is lower. Okay, this is a day to the downside. Options may be different. And the end, the destination of this trade could be just this area here, with POCs here. Can you see what has changed here? Right? All the shorts are being forced not to call. It can come all the way up to here. JKLM. Is that going to happen? No idea, my friends. No idea. Look at what this volume is, right? Just shorting, unfair prices here. Very unfair. POC is up here and shorting down here. That's not good. If you don't have market profile, you don't have this thing here, something, I've noticed that all other platforms can also have bid and ask. They have bid and ask. This is bid and ask. Just divide this in half, for example. This is bid and ask. Right? You can use the left or the right. Let's take this one, for example. It can be anyone. Just take a left or right. Notice how it dries here, and there's a lot of volume in the upper side, right? Here, the same thing. A lot of volume in the upper side, a lot of volume in the upper side, right? Higher than this here. This dries here. Oh, you can use both together as well. This I don't care about how much it is. The fact that it dries is what is what I catches my attention. You know, and here, you know, instead of drying the upper side, notice here, for example, right? It goes from higher to lower here, right? Here, there's another attempt. There's higher volume here. There can be an attempt to come down, but you're shorting below POC, below low prices, unfair prices here. In a movement, in an action, there's to the upside at the moment, right? Just by this market could be here right now, but it's just not what I do. Right? I tried a long here. Unfortunately, it was too late. I was stopped out here for a little gain here. Because I'm not willing to let this market come down all the way down to here. Very mechanical, right? This was support first. Oh. It was support. And then here was resistance. Here. It just stopped there. Very mechanical. You can see who's doing the trade, right? What are the odds of that market holding? I want to be short, but I'm not going to short here. Huh? If I have a distribution like this, you know, look at this, what's happening, right? You know, I have POC here, which is the files price at which business is being conducted. I'm not going to be short down here if I have POC up here. Also, the movements to the downside, right? This is the intra, the kind of like a daily. You know, we are inside. The market has a 22-day range, but at the last 4 days, the market is trending lower. Have to look. If once again, I don't like that word. I don't want to look. Okay, but my mind is in the short side. And this high here, this one up here, this here. Okay, also plays against the short here. The market has already took these lows out, have some extension, and now I believe this is what's holding the market. Preventing the market to you know. Now the question, the risk here, the risk of this market is right now. Let's delete that. Let's take that one. Notice whether this market has a stop. Single prints, this is excess. Good, right? It was bought here. In this area, single prints here. The market has nothing there and was bought right there. Right? So what this is doing is basically extending the single prints from here all the way up to here. All this area now are single. All this area now is single prints. That's one thing. Now, again, if the market comes back to this area, there are good odds. The market tried to close multiple times. Tried to close this gap. You just couldn't do it. But if there's a movement towards this side now, I think the market can have really good upside extension here if it comes another time here. Is that going to happen? I'm going to be part of it? I don't know. Notice what's happening now. Okay. Oh, and also, this is the go no go level. Look at this, no excess here. This increases the also this movement. Keep going to the upside. Now, where is POC now? POC is here, right? POC has moved. Actually, this moved POC from here, which was hardback, has moved it up to here, right? But it can go all the way up to here as well. Okay? Value is lower. I'm not interested in a long here. And also, another reason, okay? Another reason. If I keep doing what most traders do, I will end up like most traders end, right? Losing all my money. Okay, I want to be a seller here. I want to be a buyer down here. That's what people say, right? But I look at value. Value is in here. And POC, fails price of which business is being conducted is down here. If I short below, that's very unfair to me. It's very unfair. If I want short, I want to be shorting up here. If I buy long here, I have value down here. This is also unfair prices because I want to be buying below value. That's what value is for. Not just to give me an idea. Right? Price, not necessary. Most trading strategies are based on price. The assume price had everything, anything, all the information that can be absorbed is already in on price. I don't think that's the case in trading. There is unfair prices, there are fair prices. I think this is fair right now. This is an area where two-way trade can take place. You can buy, you can sell, you can buy, you can sell here, right? In this area. 50-50 chances here. What do I do? Please let me know if you have any questions. I thought Facebook could bring something here. No? It is they also the also the Fed is going to do some rate cuts this year are increasing, but that was already, you know, that's already in the market since last October or November, something like that. No, there's nothing new here. All right, I don't have nothing else to add here. If you have any questions, please let me know. Please let me know right now. I think, I mean, this is a rotational market here. I don't have nothing else here. You know, remember, this is my strategy, right? When I see something like this, this is for me, it's a sign. You know, the action to the upside is ending here, right? But I am going to, do I want to be short here when the market is way below? This is here when the market is way below value, way below POC. That's the question, you know, and that's not. I mean, my strategy have these shapes, you know, as a important factor, you know, to go long or to enter or to exit the market. But in this case, right, it is not just one thing, okay? It is not just one thing, because markets are not exact. This is not exact science. The markets are made of, you know, as we talk in the morning, it's made of millions of traders with different beliefs. As this is Mark Douglas, right? If there is somebody out there that has the power to move the markets, if I have something, if I have a position, you know, in theory, I just need one trader, right? Somewhere in the world to do something, you know, that is the opposite to what I am trying to do. For my trade to go sideways, right? To go south. Only one. So that's why I need to have an exit before I enter a trade. Also, most traders assume the market is right. Or not the market is right, that they're right. Okay, the market is going to rally now, so I'm going to buy here. That's what most traders do. What happens statistically? What happens to most traders? Right? What happens to most traders? 95% of traders. What happened to them? That's open. That's, you know, that's not hidden. You can find that. You got a disclaimer when you open an account with any broker anywhere in the world. You have a disclaimer that telling you the rate of failure that traders have. I think this is interesting. What I hear the other day is, you know, then if I think like most traders think, I know how I am going to end, so think different. It happened to you that, you know, that you go long and the market goes in the opposite direction? That you are way underwater, and as soon as you close your position, the market goes in the opposite direction. Alright? So let's start for something. Let's assume that I am wrong. My position, I go long or short, I am wrong here. It's up to the market to prove me that I am right. Okay? Just that. That's the beginning. I am wrong. Going long here, going short here. The market will, prove the opposite. All right. That's one way. That's just the beginning for something to think different. Normal, normal doesn't. It's not successful in trading. There are lots of good workers, good entrepreneurs here, good people, successful professionals, successful business men and women. But trading is just different. Trading is not like that. Think different. Check what the Nasdaq is doing here. I don't know why I had this level. I don't know why I had this level here. Maybe, no, it wasn't H, because I wasn't here when this level was here. But it's been solved from this, we have double high here, triple high here. This is a really bad area to sell. The odds are against me here. If I want 60% or more than 50%, right here I have less than 50. For the one time it's going to work, there are going to be 10, 20 times. That's not. The rotation in Nasdaq has been wild, man. All right. I wish you have a wonderful day. Stay safe, my friends. See you.